13.3 trillion naira. In the first quarter of 2022, it went from 13.3 trillion, which that was for the fourth quarter of 2021. Now, this indicates that according to the government dominated 4.2 trillion naira, that's 8.6% quarter-on-quarter increase in the economy. Well, to help us understand the implication of this, we have Mr. Ayodije Ibo, who is the Managing Director, Optimus by AfroInvest. Good morning, Mr. Ibo. Thank you so much for joining us.
Good morning, and thanks for having me.
So what's the implication of this increased credits to the government? What does it mean? What's the implication?
Okay, thanks. I think I would first start by explaining what the credit to the public sector means. It means that we have the financial services and the populace, or I would say investors, are borrowing money to the government. So there's an increase in the amount of money that is being lent to the government. So when you see that increase, it means by implication, there would be reduced availability of liquidity to the private sector. So you would see that, for instance, in the last earlier this year or the first quarter, we saw a lot of commercial paper issuances. This is a form of credit to the private sector, which helps to boost the available funding within that space, able to also support their businesses, both short-term obligations, especially using commercial paper, and when you for the long-term obligations using bonds, they are also able to expand their businesses. So what we would see is that it's like an opportunity cost. So the more you see that increase in borrowing, that credit to the public sector, it's in quotes like crowding out the private sector, because it reduces the amount of money that will be available for lending to the private sector. When you look at most of these debt instruments that are issued, investors lend to the private sector. But because of that increase in issuances that we've been seeing from the government angle, especially looking at the major gap that we're seeing in the budget this year, initial projection for budget deficit was around 6.3 trillion, but has been increased to about 7.5 trillion. And looking at what government has raised so far, I think government has been able to raise about 2 trillion from both treasury bills and bonds so far this year. And we can still see that there's that gap. And given also the expected shortage from oil revenue, which had been initially projected at 3.3 trillion, it means that the budget deficit would increase. So the government is keen to fill that gap, and there will be need for them to be able to increase the amount of money they need to fund, and by implication, that would increase the credit to the public sector, because financial services will pack funds to invest in those instruments, and also even the private sector will also pack funds to invest in those instruments. And as a result, it will leave limited funds for development in the private sector.
Yeah, well, so it's costing development or liquidity to the private sector. But I guess if the public sector uses this fund for infrastructural development, then, it will still feed back into the private sector.
Yes, I think that's a very, very insightful statement. But, when you look at the reality of what is happening, especially in 2022, if you benchmark the actual revenue as a proportion of even debt service, is almost 100%. So it means that most of the funding are going to even non-recurrent debt expenditure. So in terms of personnel, services, and also the expenses to run the ministry, departments, and agencies. So before you now get to the capital expenditure, which has been projected to about 4.2 trillion. So most of this funding may not be going into the productive sector. So the probability or the potential to recoup income for you to be able to pay in the future is limited. And another implication that is also concerning is that the more we continue to borrow, the more we would also increase that debt service. And as a result, it's really going to impact on the efficiency and the effectiveness of the budget as we progress. So if based on projection, it's almost 100% of our actual revenue, not projected revenue now, is being used to service the debt. And we continue to borrow, it means that it will surpass 100%. And as a result, it means that we'll just be working to service. So government will be projecting revenue that will be collected, will just be used to service debt. Then there will now be a need to borrow more. So I think the implication or what needs to be done so that we don't continue to focus more on the problem is that there's a need for us to tell ourselves the truth and face reality. There's a need to bring down costs. This, we cannot continue to, this cost is not sustainable. Both the non-current, especially the non-current debt, non-current expenditure. Yes, there's nothing we can do about the debt servicing because we have already incurred that particular cost and we need to service our obligation. But the non-current debt needs to, there needs to be a reduction in that if we are unable to grow our revenue. Yes, like it's always, the minister have always been emphasizing that what we have is a revenue challenge. And I would say that just like when you have a business, if you're unable to grow your revenue in the short term, then the best thing for you to do is to reduce your costs so that you don't continue to bleed. You need to stop the bleeding first, and you see how you want to channel more effort in growing your revenue. And once you're able to achieve that, you are on the road to achieving that, then you can begin to increase your cost. I think these are some of the major reality that we need to face, and we need to tell ourselves the truth so that things doesn't go from bad to worse.
Okay, so when you say that, one thing that comes to my mind is what we've talked about on this show a couple of times, cutting the cost of governance. Would that be the only way? And even with that, really, in reality, we've seen government come out to say, oh, there's been this number of ghost workers, you know, have been discovered. We don't know how much more is still in existence. But when we talk about reducing the bleeding, and when we look at the area of cutting the cost of governance, how do you think that can be approached in the short term?
Okay, thanks. I think the first thing is to try to harmonize the spending within the parastatal. So I won't quickly go into downsizing. They need to harmonize the spending and also reduce a lot of spending. So you see traveling needs to be cut because we can't afford it at this point in time. We're in a crisis. We can't afford it. It needs to be cut. And some major spendings also needs to be reduced. And I think there may also be need to intensify effort in terms of the biometrics to ensure that the ghost workers are reduced to a minimal level. So that will also save us some fund, and we'll leave more on the table. So I think by and large, it's more about the government has access to the cost. They know those that we can still defer. So we're not saying they shouldn't spend, but we can still defer, because looking at the projected recurrent non-debt expenditure is about 6.8 trillion. So if you look at it in this way, it means that in terms of our OPEX, using the company and the country and putting it into a perspective of a company, to run our country, we are spending about 6.8 trillion naira for less than, when you look at the government, the number of people employed in the government, you would see that it's less than, I don't have the correct figure, but I know it's less than 1 million. So it means that we are spending about 30 to 40% of our total budget on that 1 million. So it means the cost of policy is very expensive, because government is there for them to create the enable environment, to create policies that will foster growth for the private sector. So if the cost of creating this policy, creating this environment is significantly higher than a capital expenditure of about 4.8 trillion that would impact on the over 150 million and make businesses doing business and also make cost of doing business very, very low. Then if there's a mismatch, there needs to be a review to that particular cost, because it's like you're over trading. The cost of providing the services is significantly higher than the potential return that you will get at the end of the day.
It would be really interesting if we can really get this picture out there. I mean, because for a normal business person, there's no way the cost of you running a business would be more than your revenue, you know, or more than your profit. I mean, you just will not be in existence. And I guess that's why we keep hearing and talking about borrowings and the debt stock and all that. But I mean, just before we let you go, let's look at the other side, which is the revenue side. Unfortunately, even, I mean, the oil, IMF just talked about emerging economies and oil-producing economies making the most of this time with the surge in oil prices. Unfortunately, we cannot make the most of that because we're not even able to meet up with the quota that OPEC has given us. And even when we're talking about diversifying the economy, you know, we're not even doing so much, that's much good when in our non-oil exports. So I just wonder how we can move up or at least shore up our revenue, even if it's in the short term.
Okay, thanks. And when you look at the revenue, you have the oil and the non-oil. So the oil has been projected to about 3.2 trillion, but we're all aware of the oil theft that is going on and also the reduced investment. Earlier in your program, you also highlighted Total Energy trying to pull out. So if investment is currently being reduced, it means that our production would also be reduced. We are not benefiting from this, and it's what it is to declare like an emergency situation to stop the oil theft within that space so that we have more. Yes, we may not have statistics. Some are saying 80%, 50% of our revenue. So imagine that about 1.5 trillion is being stolen. And looking at it from the other hand, with the increase in oil prices, our petrol subsidy has increased to close to about 4 trillion. And when you look at what is also being spent, what is also being consumed in Nigeria, it may not be up to half of what we are paying subsidy on. It means we are also paying subsidy for neighboring countries. So these are some of the major areas that you can even reduce revenue, you can even save costs, and you have more for productive sectors. So I believe that the fiscal authorities are up to the task. They need to look at this and for them to be able to fund this. And I would also like to emphasize with the current structure that or the infra code that they've put in place, believe that if that also kicks in, it's also going to reduce the burden on the federal government, because most of these projects will be handled by the private sector, and it will reduce the bureaucracy that we would see. And more of, you see, like the Apapa to Ojota, that Dangote used some of the tax credit to fund that. Then we should begin to see more of that, because that also reduces the leakages. Instead of paying the tax to the government, and government also now try to release that fund, you also reduce that leakages, and also the cost of even those projects may also be minimal compared to when you have government handle some of those projects.
All right, Mr. Ayodele, we do know that the government is listening. We just hope to see more results from all the talks we've been having. Mr. Ayodele is the Managing Director of Optimus by AfriInvest. Thank you for sharing your thoughts with us. Do have a great weekend.
Always.